I think there's risk in it because it's just one person that's the CEO of MicroStrategy that is in command of those coins. I think that, like the kind of things we saw in 2017, which was, well, it started earlier than 2017, but that particular cycle was a 100x on Bitcoin. And of course, we weathered an immense volatility. The average person on the street will think 100x in that time frame. It's just stupid. And they're much more interested in lower volatility, something that's a reliable gain. I know that, particularly family offices in the US, they're much more interested in the gains that Bitcoin promises to make, not what it has made, which has been higher, but the promises to make are roughly currently about 110% annualized per year. The trajectory that the stock to flow model projects going forward, it's 110% annualized, right? So that's pretty high. It's believably high as well. You can do that in exotic instruments, but the downside risk is very, we've just pulled back, how much is it? Mid 30% in a matter of weeks. I'm not so interested in experiencing the downside. They'd much rather have less risk, and they don't care necessarily about the 100x. It's really about the risk-adjusted returns. And particularly, you can put yourself in their shoes. You're managing 100 million or multiple hundreds of millions. You don't want to see your portfolio swing downwards like that. Well, retail can handle that. Hodlers. Imagine losing $30 million over 3 weeks in a particular drawdown if you're fully exposed to Bitcoin. That's not really on managing that size of money. So as this thing matures, I think I agree. It's it becomes more attractive. And even Michael Saylor said that the high net worth want to buy the top. They don't want to buy Bitcoin when it's like a $4 billion asset class. They want to buy it when it's above $1 trillion because it's sufficiently de-risked. Whereas we just want to buy low. These guys are very sophisticated around risk. Honestly, if you bought Bitcoin at $1, the risk was unquantifiable. Really, there was no way to quantify that risk. You could do it numerically, wow, the volatility of my returns is really off the charts. But the risks that you can't quantify is, will this thing not be hacked? Will the government stamp it out? All sorts of stuff you can't even think of. It's very hard to quantify. So it's getting into that region where, if you look at El Salvador coming on board, it's obviously been sufficiently de-risked for a nation state now. It's had 12 years or maybe 13 years. It hasn't been hacked. The protocol runs, so that's good. Volatility is sufficiently low for a nation state to now adopt it. Still pretty high, but the upside is good. So it's a different realm now, and it's good for, I think, geopolitical, that sort of game, which is, so many people in retail are in that DG, and I want 100x, which is fine. And the Bitcoins are sitting here talking about this is hard money, and we're at a geopolitical level. We can really impact the future of the world as it goes forward. They're two different things. One's number go up insane for myself. The other was impact, geopolitical impact. I think they are two different things. Everything changes. On that topic, what the top is, currently the model says 215, right? But that's not, we're going to be at that price. That's the upper bound price for Bitcoin using this model. And that you only get that on a runaway parabolic mania phase top, which we never got. And really, I don't think we'll get that again. So I don't think, if we, this is, the prediction was, if we have a mania phase, it'll hit the upper bound, because that's what all the mania phases have hit. The upper bound currently, earlier this year, it was tracking, we didn't know what it would end up at, but it was tracking it between 200,000 and 400,000 in December, and it's $216,000 right now. That's the upper bound, but we haven't had the mania. So we're actually right in the middle of the zone between the bottom and the top, and it's very cool right now. But having said that, I think there's risk in it because it's just one person that's the CEO of MicroStrategy that is in command of those coins. He's not the owner of those coins, he's in command of it. I think if you were to break it down a bit, his course is set because those coins, again, are not owned by him. Sure, he owns a lot of it because he's got a big majority stake in the company, but a lot of the coins that he owns aren't actually from the cash reserves of MicroStrategy. Some of it is from convertible bond offerings. So it's these kind of secondary derivative instruments that he's created, and they have terms and conditions on it. And those coins are effectively You could say they're owned by other people. He's got to comply what he's got on those contracts, which is effectively, I'm going to pay you this amount of interest, and if you can convert into MicroStrategy shares at a certain point, which is effectively getting a claim on those Bitcoins, I think the whole plane screws up if he starts selling them. One thing we're going to learn is that the 4-year cycles are dead. And then we'll probably have to decide whether it's lengthening cycles, which I don't think. Lengthening cycle, by the way, is like this idea that there's more and more weight in the system. So these oscillations of bull, bear start to be, bigger momentum in longer time frames. Maybe we won't learn that this year. I don't think that it makes sense. I think that, on fundamentals, we have a 4-year gravity orbit around the halvening. So that's the mining infrastructure. So that's like one wave every 4 years. And then we have a macro cycle correlation, which is to traditional assets, which are we have bull bear markets every is it 10 years or so? Mm-hmm. Roughly, it's kind of random. It could be up to 14 years. So that's another that's another sort of wave of a decade-long cycle, and that's getting a gravity pull to the correlation to traditional assets. And then you have basic demand and supply, like we had earlier this year. There's a lot of FOMO, and then it cooled off, and all of that FOMO and then cooled off has its own cycle within our industry, which creates a wave of demand and supply. That's different. So you have all these different waves on top of each other. And so I think that the main one is the halvening, and the other big one is correlation to traditional assets. So we're about to escape the gravity of the halvening, and we're going to enter a new orbit around traditional assets. And that is like a decade-long cycle. And so it's binary. We go from 4 years to a correlated asset to traditional, and we have little wavelets, which are our internal sort of infrastructure, which are looking at this, it looks like every six or 8 months that's happening right now. So yeah, I think it's like binary. We go from 4 years to 10 years. The price is the result of all the pushes and pulls. It used to be very simple. It used to be just on chain, but now I have to understand how the derivative markets are working, how the ETF is backing onto the CME on futures contracts. So it goes beyond just on chain. It now needs really a good understanding of everything. I'm even needing to track corporate treasuries. Now that we've got this wave of public companies that own Bitcoin, they don't appear as whales anymore. They have to be known, public companies, and those coins are held by lots of different people. So it ultimately means I have to track a broader ecosystem to get any kind of reliable signal from the on-chain stuff. The on-chain stuff still works. A lot of the indicators that were built early aren't so useful anymore, and now I really much rely on on-chain demand and supply. I think actually the 2022 onwards is pretty much a big sea change in that, I think, what is it what are the numbers? It's we're getting around, definitely above that sort of, 13, 14, 15, 16, someone adoption-ish curve. What is the early mainstream? You cross this chasm. That the US is there. We're between 15 to 20% of the US population, say, depending on who you listen to, have exposure to Bitcoin. So that's a political force. And the industry is pretty mature now. Maybe 2022 is that start of Bitcoiners and the crypto industry as a whole being a political force. And that's real interesting in the US. You can't do that in China, obviously, but the US currently has that sway. So it's interesting, even though the US dollar is the main reserve currency for the world, and it stands to lose the most if it goes. I think if it loses that reserve status, it loses it a lot. It loses its business model.